Hi guys, in this video we will talk about relative volume, how to use it for day trading. Relative volume for day trading explained. Relative volume is one of the most important indicators for day traders. It can help you determine when a stock is getting ready to make a move, and it can also help you spot liquidity gaps. This blog post will explain what relative volume is and how you can use it to improve your trading performance. We will also provide some examples to help illustrate how relative volume works. What is relative volume? If you are new to day trading, you might be wondering what relative volume is and how it can be used to your advantage. Simply put, relative volume is a measure of the amount of trading activity in a stock relative to its average level of activity over a given period of time. So, if a stock typically sees an average of 300,000 shares traded per day, but suddenly sees 1 million shares traded in a single day, that would be considered high relative volume. Relative volume can be used as a technical indicator to help you identify potential breakout stocks. For example, if you see a stock with consistently high relative volume but a relatively low price movement, it could be an indication that the stock is about to make a big move. How is relative volume calculated? Rvol or relative volume is a technical indicator that measures the average volume of a security over a specific period of time, usually 10 days. It is calculated by dividing the security's current volume by its 10-day average of volume. The ratio of that 10-day period would be equal to 1.0. If a security with an Rvol ratio of 1.0 over a 10-day period suddenly increases to 2.0, it has twice the average volume essentially. Likewise, if a stock's Rvol measures 0.50, then it has half the Rvol of the prior 10-day average. The indicator can be used to identify stocks that are trading above or below their historical averages, which can be helpful in making trading or investment decisions. For example, if a stock has an Rvol of 2.0 and is trading at $10, it may be worth considering as an investment since it is trading at twice its average volume and may be due for a price increase. However, if the same stock has a Rvol of 0.5 and is trading at $10, it may be overvalued since it is trading at half its average volume and may be due for a price decrease. While Rvol is not the only factor to consider when making investment decisions, it can be helpful in identifying stocks that are trading above or below their historical volume averages. How to find the relative volume of a stock? In order to the relative volume of a stock, you must either calculate the Rvol yourself or subscribe to a charting service or broker who performs the calculation for you. Anyone who is interested in stocks has probably heard the term volume before. But what is volume and why is it important? In short, volume is a measure of how much trading activity is taking place in a stock or other security. It's important because it can give you clues about the level of interest in a particular stock and whether that interest is increasing or waning. There are a few different ways to measure volume, but one of the most common is to simply look at the number of shares that have been traded over a certain period of time, such as a day, week, or month. You can usually find this information on financial websites or through your broker. You can calculate the relative volume by dividing the stock's current volume by its average volume. A reading above 1.0 means that there is more activity than usual, while a reading below 1 indicates less activity than usual. Keep in mind that volume isn't always an accurate indicator of a stock's performance. Another way to present Rvol is to show it as a percentage. As you can see in the order montage window below, the Rvol for this symbol was extremely high compared to prior days at 4056%. The benefit of having a broker or a charting service do the calculation for you is that they typically update this in real time as new volume metrics arrive throughout the trading day. This allows you to see how the Rvol on an intraday basis is changing as the price of the stock changes. How to find relative volume in sync sourcing. Uh, when you are trying to find the relative volume in sink or swim, there are a few different steps that you will need to follow. First, you will want to select the charts tab at the top of your screen. Once you are in the charts tab, you will want to choose the studies drop down menu and select edit studies. After you have selected edit studies, a new window will pop up on your screen. In this new window, you will want to scroll down until you see the volume category. Once you have found the volume category, you can then select the relative volume, study, and hit apply. Following these steps should help you to find the relative volume in sink or swim. What does relative volume mean for stocks? Relative volume can indicate that a certain stock is more active or volatile than other stocks in the market. A stock with a high relative volume is more likely to be bought and sold than a stock with a low relative volume. For this reason, relative volume can be used to identify momentum or potential trends in the market. For example, if a stock has a high relative volume, it may be because there is more interest in the stock or because the price of the stock is changing rapidly. Either way, it can be an indication that the stock is worth paying attention to. In contrast, if a stock has a low relative volume, it may be because there isn't much interest in the stock at the moment, or because the price isn't changing much. In either case, it may not be worth paying attention to the stock. Relative volume can also be affected by events such as earnings announcements or analyst upgrades, downgrades. These events and other new releases can spur trader activity to increase, which will impact the relative volume of a stock. So guys, we'll end this interesting video. Goodbye.